Welcome to the Retirement Made Easy podcast. I'm your host, Greg Gonzalez. My goal for the podcast is to help you live a better life in retirement by giving you the tools and information you need in a language that you can understand. I'm a retirement planner in St. Louis, Missouri, and we have clients in 17 of the 50 states, and we help all of them every day make smarter financial choices and decisions as they prepare and plan for their own retirement. We created the Retirement Made Easy podcast to share some of this experience and wisdom that we have gained over the years, helping literally dozens and dozens of clients plan for a successful retirement. Every episode of this podcast, we help to bring something to the table so you can learn more and be better equipped for a bright future. If you haven't checked out our website, you can visit our website at retirementmadeeasypodcast.com. That's retirementmadeeasypodcast.com. We have some free resources there, such as our 2020 tax planning guide and my retirement secret sauce, which you can download right there on the website. If you do have questions you think I can help with, at the bottom of the webpage, it'll say Ask Greg a Question. Feel free to submit your question, and I'll get back with you within a couple business days. The website's also nice because you can listen to previous episodes right there on the website. And I wanted to first start off this episode talking about a question that I'm getting a lot lately from many different clients and many listeners. And the question goes something like this: how should I be changing my investment strategy now that it looks like Joe Biden is going to be president starting in 2021? I've even had people that have sent me some articles that were very interesting that said, run to gold, move all your investments to gold because Joe Biden is going to ruin the economy and the stock market will tank. But at the end of the article, I then noticed that it looked like the company who wrote the article was a company that sells gold. And they were simply trying to use this article as an advertisement to warn people or caution people that the economy was going to tank. And the only safe haven in their eyes was gold and gold investments. And quite frankly, they're trying to profit off this fear tactic of marketing, really. I had other clients that sent me articles that had some research done on past presidents and which presidents the stock market actually did the best while they were in office. And then the research went one step further and looked at what if there was a Democratic president or a Republican president and Congress was unified or Congress was split. And so there's one article in particular that it's pretty interesting. It was done by Forbes magazine. It's titled, "A Biden Victory and Split Congress is Best for Stocks. But Here's What Would Kill Markets After Election Night." This was written in September of 2020. The article and the research is pretty faulty in my opinion. And the reason being is because the research is comparing apples to oranges. And what I mean by that is the research doesn't take an equal number of years when you had a Republican president versus comparing an equal number of years when you had a Democratic president, and vice versa as far as a split house or a unified house. The sample size is not even anywhere close to being an equal time frame. And I'm just trying to be fair to both sides here, right? But here's what I do know and what you can take from the article. The stock market did really, really well when Bill Clinton was president. It also did really well when Donald Trump was president and when Ronald Reagan was president. So we can't necessarily say, okay, I'm going to invest now when this person is in office, or I'm going to pull my money and be more conservative based on this new Joe Biden coming into office in January of 2021. I don't think that's a very prudent strategy. And the reason being is because you're projecting. You're trying to come up with a crystal ball and see the future, and you're trying to essentially time when the market's going to do well. And no one has been able to successfully do that. I would recommend investing based on your goals and your needs, your long-term goals and needs. I don't think it's wise to change your long-term approach to investing and managing your retirement nest egg based on a short-term time frame of when some particular president is in office. In this case, Joe Biden has already said he doesn't plan on running a second term. So you're looking at a 4-year time frame here. And I would encourage you not to put your retirement goals and your retirement dreams on hold for the next 4 years. Now, what you can do, and many CPAs out there do in fact believe and have started their planning process from a tax standpoint, because Joe Biden has already said, and he ran throughout his campaign on the promise that he intends to increase taxes, not only individual personal income taxes, but also corporate income taxes as well. So there's a lot of CPAs and financial planners for that matter that are already starting to do the planning from a tax standpoint based on the expectation that taxes are going to be higher in the future if Joe Biden gets his way. So what am I talking about? Well, there's people doing Roth conversions and other strategies that are trying to take advantage of the low taxes we have in 2020, with the expectation that taxes in 2021, 2022 would be higher based on soon-to-be President Biden's intentions. So while we do recommend adjusting your tax strategy based on the changes to the tax environment, we really don't recommend changing your investment strategy unless your long-term goals have changed. For example, if you say, hey, my retirement income situation is changing because we're adopting one of our grandchildren and we have more expenses, so we need more income needs, right there, you should change your investment strategy to produce more income now that you're adopting this grandchild. That's a real life situation and change to your retirement goals that needs to be addressed, and therefore you need to change your portfolio to produce more income. But please, I encourage you not to change your long-term investment strategy due to a short-term change in the presidential office. I always look at investing someone's money, someone's retirement assets or nest egg, based on the goals they want to accomplish in retirement. Think of all that money that you sacrificed and you saved and invested throughout your working career. That money didn't get there on accident, and you certainly worked hard for it. So in retirement, you want that money then working hard for you to help make your lifestyle in retirement as comfortable as can be. But your retirement accounts, your retirement savings, they have to be working for you. And those retirement accounts are there to help you live the lifestyle that you've always dreamed of. But you can't put the money in a mayonnaise jar and bury it in the backyard because Joe Biden is going to be our next president. It just doesn't make sense. It definitely makes more sense to invest the money wisely so it's working for you so you can accomplish all the goals and dreams you have for your retirement. I was reading an interesting article or study recently, and it was called Women, Money, and Power. It was a 2013 study done by Allianz, and it asked women to get their feelings on what their biggest fears and concerns were about their retirement. And what I found so fascinating was 49% of women in this study said that their biggest fear was becoming a bag lady one day and running out of money and resources. And that just broke my heart, because think of all those people out there. They worked their entire life, they saved and invested what they could. Maybe they were raising a family, paying for the kids' education. Raising kids is not cheap, as we know. And still, their biggest fear was running out of resources at some point and becoming a bag lady at some point. So if you're a married man that's listening to this podcast, just understand that there's a 49% chance that your wife or your sister has that fear. This is why, in my opinion, the cost of a fiduciary financial advisor doesn't cost, it pays, or it should pay. And I would encourage you to find that trusted financial advisor who will be there to walk with you to and through the journey of retirement to make sure that something like that never happens. Now, not all financial advisors are created equal, so you've got to find that person who's committed to your family's financial success. Sometimes life gives you a jigsaw puzzle, and you need a friend to help you put it together. And that's what retirement planning can be for some people. I have a new client this year who had a really sad story. Her husband had passed away earlier in this year, right after COVID kind of hit strong. I think it was in April or May. And she came to me with all this paperwork and she said, my husband, who just passed away, was in charge of our financial household. And he did all the investments, he did all the planning, but he kind of left me in the dark. And I never really asked about it because I was embarrassed because it's not my background. So now here she stood in my office with all these different sets of paperwork, all these statements, and she was worried sick that she would have enough to sustain her lifestyle for the next 30 years. So my job as her financial advisor, her new financial advocate, was to teach her the ins and outs of a plan, a retirement plan that would help get her through the next 30 years. To her, it started off as a financial mess, but we were able to sort through it piece by piece together. And before long, we had a nice plan that she was comfortable with and confident that she would be in great shape for as long as she lived. But that didn't happen overnight. With patience and the heart of a teacher, I felt it was my duty to come up with a prudent, simple plan that met all of her needs. And once we got to that point, you could feel the weight come right off her shoulders. I will say there's some people that can work on their own car and fix their own car, but there's other people that simply can't. I'm one of those people. I hire a mechanic and I trust the mechanic to do the proper work to keep my car going. It's the same with retirement planning, investing, tax planning for that matter. The whole idea of hiring a trusted advisor or a trusted mechanic is so you have somebody you can depend on and you don't have to worry about coming up with the solutions on your own. Yes, it may cost you a little bit more to hire them for their services, but you'll have so many fewer headaches and you'll have more time to enjoy the things like spending time with your grandkids, for example, that you want to enjoy instead of the burden of learning how to change the brakes on your car. And if your current tax advisor or your mechanic or financial planner are not giving you the care and attention that you deserve, then go somewhere else. Find another person. There's plenty of advisors or mechanics or CPAs out there that will give you that attention that you deserve. I get a lot of questions from listeners of the podcast throughout the week, and even some phone calls from people that have encouraged me to have more episodes on this podcast of Q&A, of question and answer, because there's so many questions that we have out there, whether it's in regards to a family member's retirement or financial situation, or your own financial or retirement situation. So many questions, and I want to use this podcast as a way to help, as a way to educate, and as a popular resource that people can turn to and really enjoy. So as I look ahead into 2021, I am going to try to once a month have a Q&A podcast where I simply just go through all of the questions that I've gotten in the last 3 or 4 weeks. So I want to encourage you to go to the website if you do have a question, retirementmadeeasypodcast.com. You can submit your question there. Of course, I'll get back with you in private, but I'll also ask you if I can answer your question on the next episode of the podcast. And with your permission, I'll do so. I want this podcast to be a vehicle that gives you the courage to go after your dreams. For a lot of people, it's retiring at age 65. Maybe it's being able to have that second home in Florida or wherever it may be. Maybe it's the Carolinas. Maybe it's having the financial means to travel more in retirement or spend more time with your family, like your kids and grandkids. Maybe it's spending more time on the hobbies that you cherish. What I have found out is everybody has different aspirations. Your aspirations are going to be different than mine. Mine are going to be different than my aunt and uncles, or my parents, or your brother and sister, or your parents. And we're all kind of limited by the resources that we have, not only now, but our resources maybe in the future. So that's kind of the limiting factor. We can't all buy a beach house in California, in Florida, in the Carolinas, in a fishing cabin in Canada. That's just not achievable for most people. So we have to plan our retirement, our dream retirement, based on the resources and financial means that we have available to us. And really, it's about making the most of those resources and not outliving them. Because again, retirement for a lot of people is going to be a 20, 30, 40-year endeavor. So we have to make sure our money lasts as long as we do. And why this is so difficult for people is because we're being bombarded every day with bad news. If you listen to the news or the radio, it's just constant bad news after bad news. And the thought of retirement is a joyous thought. But we're always hearing all of this negativity of reasons not to invest and to not pursue our dreams. 9/11 was a reason not to invest. The coronavirus was a reason not to invest. The bird flu, the swine flu, Y2K was a reason not to invest. Hurricane Katrina was a reason why you should not invest your money. All these different events come and go, and they scare us half to death if you watch the news and the coverage on them because of all the negativity. But it's hard for people to put on blinders and focus on the long term. The reason why we invest in the first place is so we can have a bright future ahead of us. I would encourage you not to get caught up in the headlines, especially in a year like this where the coronavirus killed literally hundreds of thousands of Americans. So I would encourage you not to lose sight of your future retirement dreams and goals because Joe Biden is going to be in office in January. And because of the coronavirus killed hundreds of thousands of people. Our investments are there for years and decades. They're meant for the long term and our long-term goals, not these hiccups along the way. Investing and planning is a marathon, not a sprint. Hey, I hope this episode of the Retirement Made Easy podcast has been enjoyable for you. Again, visit my website, retirementmadeeasypodcast.com. Submit your question at the bottom of the website, or you can download our free resources such as my retirement secret sauce or our 2020 tax planning guide right there on the website. I'll see you next time for another episode of the Retirement Made Easy podcast. And remember, always dream big. The opinions voiced in this material are for general information only and are not intended to provide specific advice or recommendations for any individual. To determine which investments may be appropriate for you, please consult your attorney, tax advisor, or financial advisor prior to investing. This is a hypothetical example and is not representative of any specific investment. Your results may vary. All performance referenced is historical and is no guarantee of future results. All indices mentioned are unmanaged and may not be invested into directly. The SmartVestor program is a directory of investment professionals. Neither Dave Ramsey nor SmartVestor are affiliates of St. Louis Retirement Advisors or LPL Financial. There is no guarantee that a diversified portfolio will enhance overall returns or outperform a non-diversified portfolio. Diversification does not protect against market risk. All investing involves risk, including loss of principal. No strategy assures success or protects against loss. Securities and advisory services offered through LPL Financial, a registered investment advisor, member FINRA, SIPC.